Recording in progress.
What's up, everybody? Happy Wednesday, and welcome to another edition of Ninjacators' new weekly live event, Profits at Noon. We've opened up the room just a minute early to let everyone filter in, have a chance to find a good seat. CL, Clanton, Hal, Vaishal, welcome. It's great to see you all. If you're joining us over on YouTube, welcome. There's a link in the description there on YouTube if you'd like to join us in these Zoom events. We'll get you in the VIP section. Just hit that link and you can join us.
How's it going, everyone? All the familiar faces again, which is good to see.
Always. And, of course, bonus points to my punctual crowd.
Nice. Are you for your dad jokes?
I do have one on deck, so...
Right.
Hi, Hal. I hope you're well.
Hey, Hal.
Fantastic. Well, we're going to start firing things up in just a second here, everybody. I do want to take a quick note just to let you guys know we do have a birthday boy in the house. King Richard himself is celebrating a birthday today. So if you want to share a little love with him here in the chat, warm up his day just a bit, we're glad he's here with us and we can celebrate with him.
Thanks, Nate. Thanks.
Awesome. So the rest of our crew, they're just going to have to shuffle on in the next minute or two here because we're going to fire things up. We have a lot to show you today. So we're just going to go ahead and get started. For those of you who know me and those of you who don't, my name is Nate and I'm co-hosting these sessions with our very own Richard Krugel. I do want to quickly mention that we have a guest, a very special guest in the house. Those of you may remember Will Busby of Pure Financial Academy joined us a few weeks ago and shared some supply and demand analysis on the ES. The reception was great. We all loved it, and we're very excited to have him here back with us. So Will from Pure Financial Academy, if you want to give us a wave, we'll have him coming into this session. He'll also be coloring some of Richard's analysis with his own insights. So we're going to make for a very interesting, very cool collaborative session today. So you guys should be walking away with some very cool stuff. So awesome. I see Tanya, Michelle, we've had a few more people trickle in. Welcome. We're very glad to have you. One more shout out to our YouTube crowd. If you're joining us over on YouTube, please feel free to check the description for a link to join us here in the Zoom. So welcome everyone to Profits at Noon. We are firing up today's session. Just a quick reminder, we are live 3 days a week, Monday, Wednesday, and Thursdays at noon Eastern time. We're going to show you the levels that we are stalking, and we'll do our best to steer you clear of any market traps or news bombs that could be waiting around the corner. So in addition to all the great live analysis you're about to see, we're going to do our best to identify actionable levels and zones and things you can stalk and follow along with us in action. So we do encourage you to attend the follow-up sessions. As mentioned, we'll be live one more time tomorrow at noon. But for today, I'm going to go ahead and bring in our main host, the man, the myth, the legend, Richard Krugel. If you want to kick off today's analysis session, and Will Busby of Pure Financial Academy also joining the fray. Take it away, gentlemen.
Thanks, Nate. Thanks, everyone, for joining again. Again, to all the familiar faces. I do see there's some new names in here as well. Yeah, thanks for attending today again, and as well for Will having Will on board today as well. So before we do get started today, just a quick note, a quick disclaimer that all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. All right, let me just get rid of that screen quickly. And as always, I'm going to go through the ES, the NQ, the YM, Russell, gold, and crude oil. And as Nate mentioned, we'll be on the sidelines here. I won't say sidelines. We're going to try to do a bit more of a collaborative sort of presentation here today. We've had Will on a few weeks back, and it was really cool to see how some of his analysis also coincided with mine. So it's always really cool to see that as well. So we're going to see if we can sort of, spot maybe perhaps areas that is of interest to us, and see how it goes. So first off, the ES, again, since we left Monday, or since our last, how can I say, session on Monday, price made a move right into the center channel line and has since then moved lower. I did think I mentioned that we could potentially see a bit of weakness settle in. and that did occur, but as things go these days, you have these sharp movements downwards, immediately up, sharp down, sharp up. So very difficult to figure out what sort of pattern we might be dealing with here. Price has been below today's pivot point of 4,180 and 58. That should be in half for the entire day. Made it to S1 at 4,162, nearly reached S2, and now we're having a snapback back to the upside. We've also had the earnings season start again. I think Tesla either reported today or gonna still report. I'm not sure what the before market or after market what it was, but yeah, some big names reporting, and thus far had not really that much action in the indices. Like I said, pretty wild in my opinion. If we look at the bigger picture here, we've been tracking this move to the upside for quite some time now. I was saying sort of around here in the end of March that we potentially seen a leading diagonal and that we might see a pullback. And obviously I didn't call when we're exactly going to see a pullback or so forth, but then price made this very strong move back to the upside. And again, I'm still bullish in the bigger picture on ES unless price obviously starts, dropping like a stone at some stage. So the other thing in the back of my mind was that this potentially could also be corrective in nature, but just looking at the price action, I'm still sticking with the bullish bias for probably, I don't know, a couple of weeks, for a month or so. And then obviously having a look at our levels to lock, and our price is obviously trading in relation to these levels, as well as price structure and the market geometry lines that I have on here. So price sort of stopped here in the middle, didn't really reach any of our market geometry lines, and since then, well, today actually reversed strongly back to the upside again. So we might find resistance at today's pivot point at 4,180, and above that again, we have R1 at 4,196, and as well as the center channel line, which has a few times actually, act to support resistance, or price actually been fluctuating above and below it for quite some time. So I'm still bullish on the ES. Will it have the legs for the remainder of this day or week to make new highs? We'll obviously have to wait and see and recap on that tomorrow. Right, then we have the NQ. Obviously a bit different price action, obviously a different indice as well. Price has sort of been trading in a range since this high that was set in the beginning of April. It was as a fourth or a third. So range bound it is, that's for sure. Trying to figure out if we potentially seeing a triangle formation here. But if you guys have been following me and the analysis I did on that gold setup that we were looking at when gold actually made a beautiful triangle, we sort of said at some stage that, or I said that if price moves up to a certain area and gets a decline, then we potentially have a high probability triangle formation. So this is still early days here for the NQ. I'm just looking at the sideways action here to potentially just be corrective in nature with potentially more upside potential to follow. That being said, price has since broken below this angular market geometry line, which in this case is a lower median line. You see our price broke under a while back. When was this? In the beginning of the week or last week, actually, and sort of been riding that line and riding that line. And since yesterday, or since our last session, actually, has broken below it. Again, also staying below today's pivot point at 13,207 for most of the day. And it's now pulling right back to that channel line, which is right also where that pivot point is. So that might be an area of resistance, again, at 13,207. Might also be a situation where you get a break, a retest, and a rejection to the upside. It's also really important to see how the 4-hour candle, which obviously is the time frame I'm looking at here in the bigger picture, our price or the candles close in relation to these angular lines. Quite often, if you see let's say, a candle break and close above it, that's quite often a good indication that price could then move higher. So again, we've got a bit of confluence at today's pivot point and this upward sloping median line, which might act as resistance. I don't know if wool actually follows the NQ that much, but maybe if he does his presentation a little bit later, we could maybe have a chat about that. Maybe see if he's got any of his zones around that area. Don't know if you're seeing anything there at the moment, Will.
Well, yeah, actually, so it's interesting that you're kind of covering this. This is something that we've been talking about, most especially as we always do in our room and so on and so forth. But watching, your analysis, I was going to step back at kind of when we maybe in a moment I could look at the ES. So I saw that you had an S1 on the ES. Looked, I mean, if you hover your mouse over the S1, do you know approximately what that? Okay, 60 to 63. Yeah, so we had something come in. I mean, it was almost exactly there. Also on the 4-hour chart, ironically. So we were looking at 65.5. But then what I was going to mention too is when you step into the NASDAQ, right? It's ironic, but you're looking at two index markets. Now, obviously they're, derived of different equities and so on and so forth. But ultimately they're both US index markets. So we found it to be extremely interesting how you have two US index markets, but yet they're showing a very different picture. So
absolutely,
definitely with you on the bullish sentiment of the S&P subject, absolutely subject to change at any time. We have, I'll point out some levels in a moment, but I just want to get your opinion on that and what your thoughts are going, back and forth between the US index like that.
Yeah, like I said, I'm bullish on both. But yeah, I've been saying this for a while now. It's a completely different price structure. Obviously, they are different indices, comprise different stocks that make up them up. But the NQ obviously has been flying higher from this low over here. Same low that made what's sort of like the 10th of March it was than the ES. And where the ES obviously making a zigzaggy sort of crazy up and down movement. The NQ did that initially and then sort of blasted up to the upside. But yeah, just completely different sort of, eventually they will follow each other. Let's say some crash happens or whatever. I'm sure they'll eventually follow each other in direction. But it's just been absolutely nuts at the moment, trying to figure out, are we dealing here with some sort of corrective pattern? So the trend for me is up on both, making higher highs, higher lows. So I've just got to have to assume that we're potentially just correcting at the moment. The NQ has just been crazy. If you look at the YM as well, for the longest period of time, it's been stuck in this sort of mess here in the beginning of March. And then this one flew to the sky. Again, different price action, but also sort of hit these market geometry levels that we've been stalking for quite some time. I'm not even going to talk about the Russell. Russell's is an absolute mess. I mean, it's just nonsensical what's going on at the moment in the Russell for me. But yeah, if you just got to come back to what you say, I'm bullish on the indices. It's just extremely difficult. I mean, you have these sort of three-wave moves every single time to the upside, and then immediately met by downward pressure, and then immediately reversals to the upside. So yeah, probably easier to trade this intraday. I'm not sure.
Right, absolutely. So I mean, these are some questions. I would say one is specific. I get all the time, right? And it's do you correlate your index markets? And I'm happy to share my thoughts and so on it. I'm just curious, if you do that. Of course, you have your primary indices, but I agree. The Russell, it's your chaos child, right? So it's kind of all over the board. But out of your three indices, the US at least, I'm just curious, do you ever correlate them, or do you look at them as individual markets in and of themselves?
I prefer to mostly look at the ES, and then sort of like on NASDAQ, myself, one of my favorite markets, to be dead honest with you. Never been a fan of actually trading it. But correlation between them in direction, absolutely. But not really at the moment correlation in price action whatsoever. And for quite some time, actually. They eventually, like I said, they'll probably follow each other in direction. Let's say if you have a strong bullish move, or when you have important highs and lows, they typically correlate around the same dates, right? With direction as well. But trying to figure out, the price, what price action is trying to tell you, and correlation, not that much for me, to be dead honest. Just in direction, if that makes sense.
No, it makes complete
I don't know
sense.
what
In
your
fact,
thoughts
that's I mean, I put a little bit of a different spin on it, but I would say that we look at it the same way. I think our take on that is it's pretty simple. I mean, usually what we do, we're never trying to reinvent the wheel, because the markets are always going to do what they do and what they've always done since inception. And at the end of the day, that is essentially turning at order flow, right? So when you have an abundance of buyers, going to go higher. When you have an abundance of sellers, it'll go lower, and so on. When we look at the index markets like that, and based on our logical, conclusion of every single move in any market, it always boils down to the order flow. So if we're correlating, let's say, the S&P with the NASDAQ or the Dow, all of the above, what have you, or take your pick there. But ultimately, when orders are submitted on the S&P, they're not being submitted on the NASDAQ. And so I believe that the generality of the companies and so on, sure, it overall drives it in the same direction. But you definitely have traders out there who are specifically trading the index, especially the futures markets and so on. So when they're submitting their orders, again, it's just all about the unique and specific order flow being submitted onto the NASDAQ. So we have a difficult time correlating them as far as trading goes, and we try to refrain from that, just because, again, any order you place on the S&P is really not going to have an impact directly on the NASDAQ. So that's kind of our little spiel on it. Order flow is what drives the markets. We tend to focus on that.
Absolutely. No, great to hear that. Thanks for your insights on that. So I don't know if you maybe show us some on your ES charts. I'll just quickly go through gold and crude oil. Maybe, I don't know if you got any zone sort of what you're looking at the moment from a supply and demand perspective.
Sure.
And then maybe you could see if there's some correlation between some of these levels I'm looking at, maybe even the market geometry.
Absolutely.
All right, but let's quickly just look at gold. I've been saying for a while now that, and this is just a really beautiful example of our price also here on gold, it's been moving higher in this channel. So it's been respecting it for, I don't know, since here on the 21st of March. Obviously, I didn't draw it back then. Once we had this low in after this triangle pattern that we've been stalking, I was saying that be careful that we could potentially see another high, because triangles quite often form as the penultimate correction prior to an important high. And now I won't say high like a high for the year or a high for a decade or whatever the case might be. It's just for this sequence that started in the beginning or end of Feb that I've been measuring. So we've been expecting for a while since price again hit this upper channel line to potentially see a pullback. And then we had this funny sort of three-wave move to the upside. And then price came down again after hitting that upper channel line. And guess where it's now found support again, right at the bottom of our channel line. So it's still respecting that channel. So also some evidence of price respecting the central channel line. Price already hit S2 today and our projected range low at 1,989. It's made its way, and see, we also had a little bit of a market geometry line, this dash one over here, which price beautifully touched. So it's telling me that it's been respecting these angles as well. So we have angles sloping upwards and angles sloping downwards. So what I would call multiple angle confluence, if that makes sense. And then price made it above that channel line. I think just before we started today's session, price did not retest this center channel line here again. So it just looks like it did do that and it's trying to go higher again. Already reached that S1 from the downside again. And then we have our pivot point and today's projected range high, a little bit higher up at 2012, and the pivot point at 2015 potentially could be reached maybe today, potentially tomorrow. But again, we'll have to just recap things and see how that goes. My thinking here is that this potentially was a correction. It looks weird if you see price moving up and that it's part of correction, but we talked about these corrections before. We have like a move lower, price just breaks a previous high and then it comes down to some sort of like a 5-wave move. And generally, when it reaches a area of market geometry as well as the projected ranges, you quite often have points where those corrections then end. So I'm also still bullish on gold. But yeah, for me, you really need to watch this lower channel line. If that gets broken to the downside, I think we could see a further decline towards potentially even this lower channel line. Or sorry, this lower median line. Again, we'll have to recap what that prices would be by the time, if price gets there, because obviously this angle is sloping lower, right? So the price would be lower by the time it actually reaches there than it is today. So yeah, for me, bullish on gold. I think that potentially could have been an end of a corrective move, but I'd really like to see a break above this center channel line, which is above today's current candle around 2023. Whether that happens today or tomorrow, whatever the case might be, we'll just have to wait and see. If that does not get broken, which I would just call previous market structure on the way down, then and price continues hovering around here or declines, then I'm going to have to start thinking that this might be the initial move of a much larger decline to follow. But still going to treat it as corrective in nature, but potentially that it might just be a bigger type of correction, if that makes sense. All right, and then we have crude oil. Been saying now also for a while that we potentially had the third wave high, and we also had this one hell of a gap that started here in the beginning of April, and prices since just moved strongly to the downside here. So yeah, is it gunning for the low of this gap that formed over there? Who knows, but it's really been pretty weak. You can see also the price basically broke below the center median line of this upward sloping pitchfork. It tried to get above it, and that was sort of around today's projected range low, which it already broke at 79.51. It just now retested again, tried to get above it again, and it's now moving all the way down again. It's already been pretty a weak day in crude oil, with price already reaching the lower deviation of our projected ranges at 78.76. So yeah, I think if we can see a break below this candle, then we could maybe see a flush to S3, potentially this lower median line over here, or even this dashed one to the upside. But whether it's got the legs to do that, or maybe it's just going to bounce higher from here, that remains to be seen. It does look like crude oil could be in the initial stages of a larger correction to the downside. Then again, like I just talked to Will about things, you have these one directional moves immediately met by strong reversals to the upside. So we'll obviously just keep an eye on our levels and keep on recapping the analysis during our next sessions. And that's pretty much it from me on the analysis side today, guys. I know Will probably want to show us some things on his charts as well and talk about his stuff. So I'll hand it over to you again, Will.
Okay, sir. Let me see if I can get the yeah, we can do there a little video going or whatnot. Yeah, wonderful analysis, by the way. Always love seeing it. So what's very interesting to me is we've, you know, I forget exactly, Richard, how long you've been doing this. I know a long time. And I think often we forget what it's like to be on the other side, you know, of the mic, right? And you're listening to analysis and things like that. So you're kind of sitting there, it's fun. And it's very interesting to get the take on it. Yeah, love your analysis, man. Love the levels that you guys are doing. Bud. Yeah, absolutely. Let me get, let's see here. Let me get to the share icon here. We'll get you out to let me turn off something real quick. My labels. Matter of fact, I can just do it with you guys. So let me get you share.
Should I just hit stop share from my side as well?
Okay, perfect.
There we go.
All right, there we are.
Perfect. Let's get a round of applause for Will Busby of Pure Financial Academy in the meantime. A roaring applause. Here we go. I'll get us kick-started. Oh, man, thank you again, Will. We're very glad to have you. I'll get out of your hair.
No, thank you so much, Nathan. I really appreciate it. I really do. It's always great to be here. Like I said, man, it's just great working with like-minded folks and just kind of doing the whole thing together. But it is funny like to some degree being on the other end of things. Yeah, thoroughly enjoyed it, and look forward to doing it more. So what I was going to do a moment ago is I just was mentioning turning off, just basically toggling off. We can watch this kind of happen, as a matter of fact, in real time here. So what's even a little bit more ironic, this was just for the audience, if you will. This was not intended, meaning the markets that we are looking at and doing analysis on. These are the markets that we keep up, right? I mean, they don't really change that much. Oftentimes we'll get asked, hey, can you go look at a certain market or something to that extent, whether it's equities, futures, forex, et cetera. No problem. But yeah, no, I also find that interesting that we really are looking and viewing very similar markets and so on. So these are highly traded markets. I like that, especially when it comes down to, things such as, to say, slippage and all of that. I used to be a huge advocate of, I don't say advocate, that's not the right way to do it, but I used to be very into limit orders, it had to be a limit order or nothing at all, right? And so over time, though, I've somewhat become accustomed to market orders, to be specific, on the S&P. So it's like, one of the heaviest traded markets there is, right? And I look at it that way. And I think I run into the issue of not getting that execution, and mentally there's this hurdle. So you have to get over all these different hurdles and everything's all these different things. But like I said, market orders have been pretty good for me, and trading the highly liquid markets like that. Yeah. I'm not too concerned about the slippage. If, however, let's say that I was trading a spot market, for example, or something like maybe equity or cattle, or just some other market that's not nearly as liquid, I'd be extremely concerned about that, right? So I wouldn't want to use market orders. And again, I'm not advocating for them at all. It's interesting how we evolve, right? We adapt over time, and as individuals, as traders, family and so on and so forth, we tend to evolve. So let me get out to it though. Enough about that. Let me get to the S&P. So right here, what we're looking at is the tab selector. I just want to cover this really quick. Matter of fact, let me pause my video here for you so you don't have to stare at me for too long. What you're seeing here, as I said, the tab selector. So if you notice down here, again, we're pretty much looking at the same markets. Maybe I have a couple different, I think natural gas, maybe a little different, euro perhaps, etc. But these are what these are going to do is when I click on one, you'll just notice the tabs down here. It's literally just going to change every chart to the corresponding market and or tab, right? So when I go here, I'm going to left click ES. Of course, appreciate the analysis that Richard had there. And again, it was very interesting to see. I mentioned earlier that we had a 4-hour level. So if I bring this up, this is the 4-hour time frame here. And we actually discussed this, so we pointed out yesterday as an area of interest. And it really depends on the time frames in which we're wanting to trade. So for example, scalp trading, pretty small time frames, of course. We're not too into scalp trading. But again, they all have their rhyme nor reason. On the 4-hour chart, we look at a little bit more along the lines of a swing trading perspective. And again, we discussed this one yesterday. We were looking at the arrival, and I'm trying to remember exactly, but I believe your level was like 41.62 3/4, if memory serves me correctly. It was pretty close.
Yeah, so around about there.
That's what, okay, perfect. And so, those levels, like for example, I will tell you a little something that we talk about pertaining to order flow. So let's circle back to that. You had a few, and I think there was at least two S1 and S2, I believe, were in this general area. So a lot of times when we're talking about what is supply and demand and how it functions, how it works, the interesting thing is if we look at supply and demand levels more like a range, because ultimately that's what it is, right? You got a high and a low value. There's, of course, a left axis if you want a starting point, if you will, right? So we have our left axis here, and then obviously we're just extending that to the right. But what ends up happening, if we want to especially dial this down to, let's say, institutional trading, I don't know exact numbers or anything, but let's just say they're out submitting, huge quantities of order flow, maybe in the millions or something to that degree, right? What would end up happening, though, if you or anyone or any institution, entity, algorithm, could go on and on, if they go out and they submit a large quantity of orders all at once, well, we all know what's going to happen, right? Yeah, everyone can see that, who is looking, of course, on level 2 data, things like that. So it ends up having sometimes a negative impact. The point being is that they would never really do that, right? So what they'll do is within the range, and this is kind of leading me to your, you had multiple levels within it. Same with us, it's just we use multiple timeframes, but ultimately anywhere inside of this area, you may have something like this. I'm just going to left click, I'm going to grab a rectangle here. And let's say, for example, that we have this general area, in our specific case, 4148 to 4165.50. But ultimately inside of that area, again, on maybe smaller time frames or in general, like the levels that you're looking at, it may come in and it might look a little something like this, right? So what they're going to do is they're going to break it up. So, if for all intents and purposes, they want to reverse a trend, we could probably agree that institutions are pretty capable, right? So let's say that they wanted to reverse a market or at least attempt to, or even just have a pullback correction and so on. I always lean against that there again on the order flow, because if they attempt to do it just all at once, you're going to run into multiple issues. Number one, everyone can see it, right? So that's going to be problematic for sure. Number two, and probably more important, would be they're not going to be able to get their orders executed. So if they do it all at once, let me just throw some crazy hypotheticals out there, right? But let's just say that institution or collectively institutions, what have you, they come in and they want to buy up the S&P, maybe like, 1 million contracts or something. Again, crazy hypothetical numbers, but so they want to do that. Well, at any given time, if they come in and submit to buy, 1 million S&P contracts, there's simply no way that there's going to, at one tick increment, be 1 million opposing orders, right? Which by definition means that only a portion of that transaction can occur. So out of the million, let's say, they may get like 50,000 executed. So again, that's problematic, because in order to reverse the markets, you need the abundance of order flow. But conversely, in order for them to, let's say, make it worth their while, right, they need a large percentage of the orders to get executed. Once that happens, then price, of course, can turn and go, in the corresponding direction. Everybody's happy, right? Now, the orders that are left over, and this is a kind of an important distinction in our opinion. So out of those million, the hypothetical there, let's say that they take this approach, right? So they come in and they go in here and they get, 50,000, 100,000, 200,000, so on and so forth. But ultimately overall, let's say, right, collectively within this area, they end up getting, 700,000 of those, maybe like 70% of their orders filled. Well, you still have potentially 30% in our hypothetical there, 300,000 orders that would, they would, want to get executed. So oftentimes in these levels, what we end up seeing are multiple retests of them, right? So on the initial decline, if you will, maybe they're hitting some orders. Again, this could have been that 50,000 or 100,000 or what have you. And then they come up and they end up going, for the remaining orders. Well, when we leave, if they don't get those orders executed, they are still there for the most part. Okay. Now, not always, of course, they could cancel them, or if it's a extended period of time, we would have rollover. So it's not really physically possible to have orders always remaining, and at least not in the futures contracts, because they expire. So anything that expires, you're going to have a cancellation of said orders, right? And hopefully you don't get a call from your broker with a problem, but anyway, so they physically can't be there forever. But based on the different styles of trading and so on, as it comes back into this area, as it typically does, in fact, just no intention here whatsoever, but what's that right there, right? So we would look at that pattern, and I'm just randomly doing this, but here you can see that's almost a picture perfect inverse head and shoulders. So the patterns that are in occurrence throughout the markets are what we would, we would basically break it down to just being self-fulfilling. And earlier, as you were doing your analysis there, Richard, and we were talking about the order flow and why we don't correlate the markets, is because of that. Everything that we do really boils down to the order flow in and of itself. For example, the hows and whys of the markets are just, in our opinion, the most important thing of all, right? So understanding that logic, again, hypothetically, 1 million, you leave, you have maybe 30% remaining, so on. You're going to typically go back to get those orders because they don't like their orders to be left without getting executed. And that, I think that, that's kind of goes for most all of us, right? I know this morning I'll show you an attempt that we made and unfortunately did not get it, but we certainly tried. So anyway, the order flow, though, I just want to point that out because with your level or levels, should I say, lining up with our general area, it makes for a lot of interesting trading. Now, we could also, we have built into our software, we could, I won't take the time to do it today, but we could enable a secondary, what we call our secondary zones, right? So instead of just seeing this one rectangle here, you would see another one called the secondary zone menu. And what we can then do is we can take and let's say this is a 4-hour chart, but we could then overlay a different time frame zone on this chart as well. So hypothetically, maybe we want to put some 15-minute zones on here as well. So this would coincide with what I've been saying, right? You have a lot of smaller time frame levels inside of your bigger time frame levels.
That'll be cool.
Do you want to see it? Do you want me to do that?
Yeah, why not? I would love to see that.
Sure, no problem, man. Let's do it. Let's have some fun. So what I'll do is just reduce my days down, just for time's sake or whatnot. All right, so what I'm going to do is just go ahead here. This is our user inputs menu. And then if I go here, you can see how we have secondary zones. I'll enable those, set those to, in the hypothetical there, we use 15 minutes. So is that okay, or do you prefer a different time?
Go for it. We'd love to see it.
Awesome. So I'm just going to click apply there. And so what we're doing is, again, we're just kind of overlaying that. And what you'll find, we've color coded them, right? So you have your green and your red zones. Those are going to be there. By the way, I should kind of specify and point this out. All of the zones are, in this case, you can see all the primary zones. Let me do this. I don't want to get too much clutter. The primary zones are red and green, right? So they're always going to be red and green, but the more times they're tested is a reduction of opacity. So each time, green could turn to light green, could turn to, and just kind of almost disappear, right? So this right here, ironically, at one point looked like that. It was super bright and yellow.
It's pretty cool how it's tested that twice now. So did that print around about just before April 16th? That zone, just the one above it. Yeah, that one. When is it actually?
Well, what about it? Go ahead, Rich.
When do those zones print? I mean,
well, so that's a good question, actually. There is no, obviously in the algorithm, there's all this criteria and everything like that, but there is no defined answer. And the reason for that is because there's multiple algorithms at play all at once, right? So it would take in order flow, stipulate X amount of order flow, for example, plus distance, plus time, and so on and so forth. Yes. But I can tell you for the most part, I would venture to guess here. Actually, you know what? No, let me backtrack from it because these are the smaller time frame zones. Yeah, that zone, honestly, it was probably printed way before this bar ever printed. I can tell you that. So it would have been printed way back here sometime. And then in the future, it would have come back, again, it would have been printed before the close of this day. And then so 2, 3, 4, 5, 6, probably about 6 days in advance, 5 to 6 days. Yeah.
Very cool.
Yeah,
so it's been every single time pulls back in there, sort of a bit of a confluence as well. The smaller one also printing on the top there.
Absolutely.
Just like you said, probably some orders left there. Retest, get in, go up, come down, retest, go up. Very interesting.
Yeah, it really is. And if I could find let me see if I can find something for you. One of the things we talk about a lot, trying to think off the top of my head, a recent example. You know what? Yeah, I got you. Hold on. So let me get off this for just one moment. Let me go up to the larger picture. So what I was trying to think off the top of my head, can I give some real examples of like actual, as opposed to just trying to find some random, example. So don't worry about the lines here. I'll explain those in just a moment because we were talking about the Russell earlier and joking around about being chaos. Well, this is my chaos right here. I can't, oh my goodness,
You've seen all my lines, so we both like chaos by the looks of it.
Oh man, it's a lot to interpret, right? But once you kind of know what you're looking at, it's like, oh my goodness, yeah, that's so very simple. But when someone else looks at this, they're kind of like, wow, that's a completely different language there. But yeah, so I'll show you this right here. And when it comes to the order flow, our principle or core, if you will, is order flow and how it functions at any given level. So earlier when we were talking about the supply and demand, and I gave that crazy hypothetical, we walked through that, and then orders getting executed, they don't like for them not to get executed, and so on. This is a case in point. And in fact, this is where we're, as everyone can see, this is where we're currently trading, like right now today. So if I just kind of grab this, so we can see current price, and we follow that horizontal dotted line there. That's just literally a price line. That's all that is, just showing where current price is trading. But so we're in this same level. And one of the things about this level is, ironically, it has held us down exponentially, right? Over and over and over. And every time we're coming up to this 4180 level, we're getting rejected substantially. But here's what I want to point out about it, right? So this is our level. This is how, again, it was, matter of fact, I think we had some great trades out of that area initially. And I know we did all the way up to this one too, but they were getting pretty aggressive over here. But if you notice, I'm kind of scrunch. Let me see if I'm going to do it like this so that it makes a little bit more sense. And again, I apologize for all these lines. I probably should have deleted, but that's okay. So what we have here is the initial retest, right? And if I take this and I think logically, okay, well, there's those hypothetical million orders to the sell side or what have you. We would execute those orders because logically and just general fact-based, you cannot go above a price value until the orders are executed at said price value, right? So for all intents and purposes, up to, let's say, 4175 in this case, we physically cannot go to 4176. This is the S&P, so it technically would be 4175 quarter. But suffice to say, the principle is the same. So we can't go above that, right, until all of the supply and or sell orders are executed. They can't be there anymore. Otherwise, they already have been executed, or they're about to be executed immediately because you're trading above, right? So again, it's always based on the order flow. And what we've noticed going forward in this particular level, watch what happens into the future, because it's very interesting. When you find a significant supplier demand level, if you watch it, it'll create a general shelf, is what I call them, right? But then as price returns to it, it doesn't just return to a general area, it's extraordinarily specific at that point, right? So when it returns to it, watch what happens over here. So I'm just going to slide forward. You see that right there? Okay. So what has just happened is we literally came up, and don't forget the logic that I was talking about. So we came up to where previously we got a substantial rejection, right? So a lot of supply right into that. And knowing what we know about order flow, the moment that we touch the exact high and or greater than, that's where those remaining orders in the previous hypothetical or analogy, it was talking about that 30%, and they don't like to get them left or leave them left behind. So we go over here, we tag them, and we get another substantial rejection, right? Well, what I can do at this point is I can conceptualize that more order flow has now been taken away from the market. But again, not just generally, very specific. So if I take this up, something like that, sorry, I'm trying to get this as precise as I can. There we go. Yeah, so basically to this high over here, and then we progress into the future, right? And so you can see now where price turns yet again. What we're looking at right now, based on the understanding of what I've kind of just discussed in our further conclusion, we've used up this area. So our belief is currently on the S&P, we are going to go higher. But I think you have mentioned this earlier. I mean, this is absolutely subject to change. So there's two things that we're looking at. But I just wanted to show that because that was a perfect example of the order flow and what I was trying to explain there.
Definitely is.
So, yeah, I mean, so if you look at it now.
Hitting it, and eventually, potentially just going to break above it. which could even be a
Absolutely.
way more bullish sort of signal. Um,
It is
yeah, very,
interesting
very
that you
cool.
say it like that, but you're absolutely right. I guess if you're looking at it as a to kind of derive some sentiment, if you will, yeah,
Yeah,
absolutely. Like that'd be very bullish to me. And just to be transparent and tell you kind of going back a step here, this area right here, we were already looking at the market. So in our live room and all this good fun stuff, any of our members can contest to this.
right.
We were watching this level, right? And as we were coming up to it, I'm paraphrasing here, right? Not verbatim, but what we said was we anticipate that price will arrive up to, just above this particular retest here. And then we'll get another rejection, but it will be much smaller than the previous rejections. And overall, in other words, we expected a bit of a bounce away from it, but ultimately we could go through it. Well, little did we know, right? So we ended up getting a much larger correction here than we thought we would. But as we continuously say in the room and all that, it's not our job to predict, and we're not trying to get this right every time. We just want to get it right as often as we can. And then, of course, making sure our risk and reward is intact and all that good fun stuff to strategize. But yeah, so just again, being transparent there, we actually thought that what it would do is consolidate, and this would have been a picture perfect like that right there. And then a follow through on the upside would have been a beautiful thing. That's what we were pretty much not to say hope, but that's what we were anticipating. Now that we've done this all over again, you can see why I don't really like the term bias per se, but our sentiment, if you will, is indeed bullish. And now that we've kind of walked through this whole scenario, you can really see why. But at the same time, if we look at what's just above it, right? So oftentimes with those, I'm sure that many people who are listening or whatever, they've thought of what people refer to as bull and bear traps, right? So they'll remember, you hear all over CNBC, what have you heard? Well, we're trading between, the what do they call it? The 3,800 and 4,200 range or what? But the point is they remember these numbers. They're publicized, they're put everywhere. So in a general sense, people recall those numbers off the top of their head. And at that point, once it breaks through that, they think, well, here we go, right? Time to go. But that's actually, I would say more often than not, far from the truth. In fact, a lot of times, once you get through an area like that, what you're going to do is butt your head up against another brick wall, right?
Yeah.
So we want to, try to always stay focused. And speaking of which, on that, let me give a little bit of analysis real quick so I can, definitely say that I did that. On the S&P, let's kind of clarify this clutter a little bit, right? I'm going to scrunch it up ever so slightly. What we're looking at here, this is a bullish. So a bullish is just a trending channel. Anyone and everyone who has NinjaTrader can grab that. You can left click here. And if you go down, you can see trending channel there, or you can hold Control-2 for your hotkey. But that's all these are, right? So these are trending channels. We just applied a couple of additional percentage value lines within it, specifically 25, 50, and 75%. Now, with that, we're looking at this as a current swing within a larger time frame or a larger picture trend, right? So, for example, think of this here essentially as a weekly trend, so that we're oscillating between the support and resistance on a weekly chart. And if we go a little bit more granular, get a little bit more aggressive with it, this here becomes our daily. One could debate that that's a trend. Sure. It absolutely, if you want to look at higher highs and higher lows and so on, we never get into those debates because there's never any winning them. It's just a matter of opinion, how you, or methodology, dependent upon how you look at it. But so anyway, this to us is a current swing inside of the weekly and or larger picture uptrend.
Yeah.
And then this here, what we're looking at there is the possibility in a weekly, let me, as a matter of fact, let me do this real quick and I'll try to hurry here. I'll give some general out. There we go. Clarify this a little bit more, right? So here we have the possibility, if we cannot get above this is where I was kind of almost giggling earlier when I'm like, ooh, subject to change, because we're at such a critical moment right now up into this weekly supply. right? And remember, based on the logic there, would say to us, well, we might get just above that, and then bam, there we go again, right? We're going to run back into more of those orders and so on. So we now
breakout
have
traders get slaughtered so many times as well, on any time frame, really.
Yeah,
You know,
no, it's so true. It's, I mean, it really is. We even have a whole lesson in our curriculum course on bull and bear traps specifically. So it's interesting. But yeah, that's what we're seeing here. We're seeing, you know, bullish current sentiment, but this is in alignment with this weekly, you know, current uptrend, right? However, what we know is about to happen is we're going to arrive up into this area. Number one, you have weekly supply, right? Number two, we're going to be nearing resistance on that daily. We can go back down and look at that, but we're going to be nearing the resistance, i.e. the top of the channel on that daily. And then at the same time, we're going to be nearing the top of the weekly current trending channel as well. So all this confluence, I guess at the end of the day, what I have to say about that is just be extremely mindful. I'm bullish, to be clear. I am bullish, but I am short-term bullish. And I am not going to go full bull mode you know, until we can substantially get through that. In fact, I'm pretty much going to do the opposite. So what we're looking for here, you know, hopefully hopefully we'll be able to get up a little bit higher, at least to this 42.76 area. And then at that point, I believe we're going to find that there's going to be a correction, most likely back below 4,200 and or potentially lower. And to take that a step further, if that does happen and we go down and we start to accumulate on the sell side, there really isn't much to stop us from going a decent bit lower. So I just am not discounting.
In the back of my mind at the moment that is definitely a possibility, you know. What I really like about this, sorry for butting in here, is that, you know, you still pick your areas where you want to trade from. You could be bullish or bearish, you know, but you're not just necessarily jumping in, you know, you've got a plan. This is what we've been talking about with to our traders or the people that participate in these sessions as well. It's perfectly fine being, you know, what looks like one hell of a probably intraday trend or whatever your time frame you're looking at. And you're looking at a weekly. I mean, it's made 1, 2, 3, one could argue 4, 5, almost 6 weekly candles to the upside. You know, it's going to run out of steam at some stage. I'm not saying it is, but, you know, it's at an area you'll be interested to short it, you know, rather than trying to short it in the middle of nowhere.
Absolutely. Because, I mean, at the end of the day, right, all we have is, I guess you could just term it probabilities, right? And there's no guarantees. There's no any of that. So our job is to recognize, obviously, like we said, the order flow, but to recognize the recurring patterns in the market. And the thing about that is we are, I mean, look at us, for Pete's sakes. We're, you know, human nature is a fickle pickle, right? And we create all of this. It's ironic, but that's exactly we're the ones doing this.
Remember,
and one could say,
patterns you see is just a graphical representation of people's behavior, really. Investing.
Absolutely. I think almost those exact
it doesn't really change
in one of our lessons. Yeah, it is, and it's amazing. So, but yeah, you know, we definitely do it. Human nature is what it is, and it's never going to change. One could say, well, what about the algorithms? Well, who created it, right? I mean, there's always a person or people, if you will, behind everything that occurs. So, but yeah, you're right, man. Having the plan, and more importantly, sticking to it, that's been a savior or saving grace, if you will. But that's been everything for us. Without that, I am just being transparent. I'm not, you know, capable of doing what I want to, reaching my goals, if you will, without having that plan. You know, if I can't say to myself at the end of the day, this is what I set out to do and I did it, it's okay if I'm wrong, because I've factored that in. That's the whole thing. I've factored in being wrong a large percentage of the time. Obviously, I want to be right a lot more than I'm wrong, but the idea is factoring that into my plan. So just making sure that I have you know, accounted for that. And then again, I get to, you know, lay in the bed and go, oh man, it was a tough day, but did I do what I was supposed to do? And has it functioned and worked for me over the long term? And if those answers are yes, then I go to sleep easily. You know what I mean?
Yeah, absolutely. I
Yeah,
agree.
just
Wow.
real quick, I'll conclude, man. I got so the S&P bullish, yep, temporarily. I say that loudly, very temporary on the bullish sentiment, because we kind of walked through that. So we understand longer term. Let me turn these off for just a second. There we go. So this level up here, specifically 4276, a lot of confluence coming in at that area for us. So we're going to be watching that one pretty closely on the S&P. Now that's a little bit of a bigger picture. But again, in order for us to get up there, that would be ideal. We'd be exhausted to the upside, overbought, bit of a bull trap above these 4,200 highs, and so on and so forth.
Gotcha.
And then I think, what were you looking at? Oil, was it? So, NASDAQ, I can take a look at the NASDAQ. We do have a level coming in at 13,655 half on the NASDAQ, maybe a little bit lower than that. But given the nature of what's happening right here, we want to be pretty aggressive on that. Because there's a lot of accumulation, kind of what you were talking about. And that's why I was interested to see your thoughts on it. The NASDAQ actually has shown us recently that it wanted to lead ever so slightly on the downside. So we were actually watching the NASDAQ for potential. It was going to give us the heads up, so to speak, right? If the market was to decline, we were looking for a bit of a break down out of this range. If we're in the middle of it, that's fine. But up on the upside, if we break higher, we anticipate that we'll most likely make it to about 13,655. I think you had looked at oil. So one of the things on oil, let's see. Well, yeah. So let me just do this. I noticed on your chart you had this gap, right? And ironically, in our live session, we did the exact same thing, right? So we kind of come in here and we highlight this, but at the same time, this is one of those scenarios where we said, okay, look, there's a little bit of support that came in through here. And we definitively said not demand specifically. And this draw tool, just so you know, it was there before any of this happened. So ultimately, we were expecting it to pull back to this 80 half area. And we specifically said, even this morning, that it would likely dive a little bit below that. So what we ended up doing was kind of confirming that on the smaller time frame. I'm going to show you that real quick.
Which it has, yeah.
And so this is what that is right here. This is the demand area that basically came in. And as you can see here, what ended up happening is, I'll just kind of toggle these off for just a moment. What ended up happening, though, is we declined into this area, right? So here's our demand zone. But more important, so there's going to be demand, supply, all that all over the price chart. What's more important, always in our opinion, is the location, number one. And then number two, if I'm looking to take a trade on the buy side, I want to understand and see it. In other words, prove to me that the buyers have, to some degree, taken control of the market. So that's basically what this is. They took control of the market this morning. We just happen to be, as you can see here, we're big on our channels and so on. We happen to be penetrating lower. A lot of things, a lot of confluence, kind of like I'm saying on that weekly, S&P and so on. We're really watching out for that confluential measures. But that's all this was. It dipped down into our location just below the support. We had a lot of support from the channel here on the low side. In other words, we expected a retracement back up. We then got our demand exceeding supply executed, and it's kind of simple like that. But overall, sure, oil could absolutely go lower. But the one area here on the upside that we're watching, if we do take out, so I'll go ahead and redraw this. If we get up here and take out this high, we believe that we can most likely gravitate at least just shy there of the 90-90. So maybe 90-91. But and if we picture that, let's go ahead and grab the trending channel. If we just try to, again, with our plan, right? So if I can anticipate things in advance, I can come in here like this. And then what I can see there is, you see how this is self-fulfilling? I did that completely random, but yet look at where the top of the line is. So it's just all these things lining up. But I would love to come back. I know we're pushing on time. And I didn't get to get through all my markets because I have a tendency to ramble like that. Sorry about that.
No, all good.
It's it happens,
Great
right?
stuff.
No problem at all, Will. I mean, just endlessly fascinating. And of course, we're more than willing to take you up on that and have you back whenever you're ready. Thank you so much, Will. Again,
Absolutely, guys.
everybody here, we've just really enjoyed our time with Will as we've continued to work with him. And I know, Will, you did have some links you were going to share, so I definitely want to make sure we have a chance for that. If you guys want to continue to follow Will or see where you can hang out with, spend some more time with him, check out some of his tools. I do have those links ready if you want to give maybe just a brief description of what they could expect with some of these.
Yeah, absolutely. And I, so thank you for that, Nathan, for sure. Yeah. So there should be, I believe, 3 links that you mentioned, but so one would be just our free events, right? We try to do a lot of free events because ultimately we're trying to keep people ahead of their critical thinking process when it comes to analysis, and just share our thoughts, kind of like we're doing here today, and so on. So a lot of free stuff. That's the free event. I believe it's purefinancialacademy.com. I think it's like free online trading education. So that'll be the link. And then there's a couple of other ones. What you're seeing here, there's 2 things. It's actually built into one another. So if we're talking about our order suite, for example, this thing right here, this is how we submit our orders. So if you take this menu here and this menu here, if you removed those, what you'd end up with is our PFA order suite. Now, what I would like for you to do, I don't want to take up too much time here. So if you'll just click that, the PFA order suite link, you can go out and just review a video. It'll basically show you how that functions and what it is and so on. And then beyond that, you also have the zone suite, which is essentially the order suite. It has all of this functionality, the orders and so on. But in addition to that, it has a lot of built-in features and functionality tools, as well as the multiple timeframe zones. And there's so much that I couldn't get to today, but if you're in those free events, we'll cover that, rather explicitly in the next event. So thank you, Nathan.
Awesome. Yeah, definitely. Please, we encourage you, take Will up on that. Join him in his next event. If today was any indication of what you're in store for in those events, it's safe to say it'll be well worth your time. So again, we are very thankful. We did have a question come through, but it looks like we are running out of time. So Richard, I was going to posit this to you, maybe Thursday, if our friend Blessing comes back. I know you and I used to look at a few other markets upon request. Maybe you and I would have time to do that Thursday.
Tomorrow?
Sure. Yeah, that actually is tomorrow. I don't know why I could just simplify.
Have a look at live cattle and the New Zealand dollar.
Yes, that was the requests.
Yeah. I've also seen another one for Disney. I unfortunately do not have the stock data feed. I could ask Kyle to potentially, I think his kinetic feed might be able to do that for us, which sure. I do have access to. So Blessing, please come in tomorrow again, and then I'll see if I can do a quick analysis on live cattle and New Zealand dollar for you as well. We'll basically just give you a view of what I'm looking at there.
Sure. That sounds great. So Blessing, please join us again tomorrow if you're able. We'll be live again tomorrow at noon Eastern time. If for any reason you can't make it, these events are simulcast live onto YouTube, and they are populated into a Profits at Noon playlist automatically. So if for any reason you ever need to catch a prior session, or you'd like to recap any of the info that we've covered, please head over to the Ninjacators YouTube channel. You can find a full playlist with all of our sessions. And I guess that brings us to the end of today. Thank you so much, everyone who joined us today. As always, we love our core group here. It's great to see all of you. So thank you so much. We hope to see you again tomorrow for the next session. Again, we're going to be doing some of those requests. So if you have any questions or requests, please feel free to join us. And one more time, I'm going to thank Will Busby of Pure Financial Academy. I really want to encourage everyone here to check out those links, check out his events, and as well as some of his software. He has a lot of cool stuff on offer, and it's not the last you will be seeing of Will, so we'd love to have Will back. We'll keep you in the loop when we can expect him to come back, and just so you're aware, we're also working on some other stuff with Will. We'll have a full-fledged webinar with him in a little over 2 weeks that we're very excited for, so be on the lookout for some updates on that coming in the week or so ahead. And then, yeah, thank you again, Richard. Once again, happy birthday, sir. We need to cut you loose so you can make it to happy hour before. I know you're hours ahead of us, so we got to get you out of here. But awesome. Well, parting wisdom. In lieu of parting wisdom, I'll just drop our quick dad joke on the way out of the door, if that's okay with all of you. Very quickly, I will put it in the chat because, again, sometimes it helps to see this spelled out. So what do you call a line of rabbits marching backwards? Question of the day, folks. Jeopardy music queued up. This is our dad joke. What do you call a line of rabbits marching backwards? And I know Jackie is just, she's bracing for this punchline. We call that a receding hairline, folks.
Oh no.
You heard it here first. A receding hairline. So let that sit with you for a second. Let it marinate. Awesome. You're welcome. The reactions are all appropriate. Excellent. Well, thank you so much, everyone, again. We really look forward to seeing you tomorrow, and we look forward to having Will back in the house as soon as possible. So thank you all. Thank you, Will. Thank you, Richard. Thank you to everyone in the audience. We will see you again tomorrow. Goodbye. Have a great afternoon in the meantime.
Thanks, everyone. Take care. See you tomorrow. Cheers, Will.
Same to you all. Thank you. Thank you.